Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we are looking at a report from Union Carbide Corporation. Now you might not have heard of them directly, but they are a major chemical company, and like all major companies, what's inside this report can make or break them, so let's dive in. Are there hidden surprises, a comeback story, or a company on the edge? Stay tuned to find out. Here is the hook. Union Carbide just posted a mixed bag of results with sales down but costs up. Are they heading for trouble, or is this just a temporary hiccup? Let's break down the numbers and see what's really going on. First off, this is their financial report for the first 3 months of 2025. A quick snapshot of how things are going for the company at the beginning of the year. It is important to note that Union Carbide Corporation is owned by Dow Chemical Company. Because Dow is their main customer, this report shows how they're doing as a supplier to Dow. Let's get straight to the numbers, starting with the income statement, which shows how profitable they were. Their net trade sales, which is sales to regular customers, was $30 million, which is slightly down from last year. However, the big money comes from sales to related companies, mainly to Dow. That number is $948 million, which is less than the $1,067 million they made last year. This tells us that Union Carbide is selling less product than the previous year. It could be temporary, or it could be a worrying sign. Next up is cost of sales. This is how much it costs Union Carbide to make their products. That number is $1,064 million, which is significantly higher than last year's number of $931 million. This is a big problem. Their sales are down, but their costs are up. This means they're making less money on each product they sell. Research and development expenses remain steady at $5 million, so that's not a major factor. Selling, general and administrative expenses also remained roughly the same at $2 million. However, the company booked $6 million in restructuring charges. This comes from actions taken to reduce costs because of ongoing financial weakness. In plain English, Union Carbide is trying to become a leaner company, which often involves layoffs or consolidation of operations. On the bright side, Union Carbide made $27 million in interest income. This is money they made from their investments. They also had to pay $1 million in interest expense, which is the cost of borrowing money. The final result is a loss of $103 million before taxes. The previous year saw a profit of $165 million. After taxes, Union Carbide had a loss of $82 million. This is compared to a profit of $129 million the previous year. Ouch! A quick glance shows depreciation, which is an accounting method of spreading out the course of an asset over its useful life, remains steady at $31 million. Capital expenditures, which are funds used by a company to acquire or upgrade physical assets such as property, plants and equipment, were $68 million, a bit lower than last year. Let's look at the balance sheet. It is a snapshot of what the company owns assets and what it owes liabilities at a specific point in time. Union Carbide has $11 million in cash. This is unchanged from the end of last year. Accounts receivable, which is money owed to Union Carbide by its customers, is $17 million. The biggest chunk of receivables is from related companies at $719 million. This is a considerable drop from $846 million at the end of last year. Income taxes receivable also remained steady at $39 million. Notes receivable from related companies are $548 million. Inventories, which is the value of their raw materials, work in progress, and finished goods, is $307 million. Investments in related companies such as joint ventures are valued at $237 million. Union Carbide is owed $1,061 million by related companies for the long term. In terms of property like plants and equipment, that's valued at $5,798 million. However, after taking into account depreciation, it is $4,641 million. This leaves a net property value of $1,157 million. The corporation has net intangible assets of $6 million, which reflects accumulated amortization. Deferred income tax assets is $273 million. Turning to the liability side, notes payable to related companies is $18 million. Long-term debt due within 1 year is $126 million. Accounts payable, what they owe to their suppliers, is $373 million. Accounts payable to related companies is $456 million. Income taxes payable is $21 million. Asbestos-related liabilities due to long-running legal issues is $78 million. Long-term debt is $143 million. Pension and other post-retirement benefit obligations are significant at $39.3 million. Long-term asbestos liabilities is $680. Finally, the corporation's stockholders' equity is $2,086 million. Let's review the cash flow statement, which shows how much cash Union Carbide is generating. We already know they had a net loss of $82 million. Depreciation and amortization added back $35 million. Deferred income tax had an impact of negative $24 million. There was zero from net gain on sale of ownership interest. Restructuring and asset-related charges contributed $6 million. The impact of net periodic pension was $9 million. Changes in accounts receivable had a negative impact of $1 million. Related company receivables saw an outflow of $114 million. Inventories had an outflow of $11 million. Accounts payable saw an inflow of $46 million. Related company payables saw an outflow of $15 million. Asbestos-related payments saw an outflow of $24 million. Capital expenditures had an outflow of $68 million. Change in non-current receivable from related company saw an outflow of $58 million. Dividends paid to parent was $28 million outflow. The cash and cash equivalents at the end of the period, it remained unchanged at $11 million. Let's get into the notes. Financial reports often have very important pieces of data located in the notes section that you absolutely need to know about. First, the company provides updates on new accounting rules and regulations, which are always changing. It does not appear to have had a significant impact. Union Carbide relies heavily on its relationship with Dow Chemical. It sells most of its products to them. The company took restructuring actions which resulted in $6 million in expenses. The breakdown of inventories between finished goods, work in process, raw materials, and supplies is disclosed. The company participates in a supply chain financing program which helps vendors get paid sooner, with the corporation paying the financial intermediary later. This is used to extend payment terms with vendors. Like many older companies, Union Carbide has significant environmental and legal liabilities, particularly related to asbestos. There is also breakdown of accumulated other comprehensive loss, which is changes in equity not reflected in net income. The note related to pension plans is about retirement and post-retirement benefits. Fair value measurements is about how the company values its assets and liabilities. The note on related party transactions shows how much business Union Carbide does with its parent company Dow, which is substantial. Finally, the note regarding business and geographic regions shows where the company's sales are coming from. Now, what does this all mean? Union Carbide had a tough quarter, sales were down and costs were up, and the company reported a loss. They are trying to cut costs and become more efficient, but they still have significant environmental and legal liabilities. The report ends with some standard disclosures, including management's assessment of internal controls and procedures. Looking at these results more broadly, this report indicates that Union Carbide, or at least the segment of Dow that it represents, is facing headwinds. This decline could signal broader issues within Dow, or perhaps is a temporary dip due to maintenance and external pressures. What is notable is the drop from profit to loss, which is never a good sign. And the key risk lies in their sales relationship with Dow, and any economic downturn could severely impact Union Carbide's performance. In the meantime, let's hope that these restructuring efforts can turn things around. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and share your thoughts in the comments below. What do you think about Union Carbide's future? Let's discuss.